Hey, my name is Tucker Krause, and welcome back to my channel. In today's video, I got another quick news update for you guys. Pretty light news week, not a lot to cover, so let's not waste any time and get right into it. Alright, so first up, the SPR is rapidly draining. As we can see here from Zero Hedge, the Strategic Political Reserve is now below 500 million barrels for the first time since 1986. So on this chart, green are CL futures, so basically just oil price, and in red is the Strategic Political Reserve. And so we can see it is very, very low relative to where it's always been, because that's, of course, Joe Biden's just been draining this thing like crazy to help slightly alleviate oil prices. But, you know, you're not actually allowed to go get any oil, of course. That would be too far. But anyways, of course, this is a very bad sign, and once empty, it'll cut off even more oil supply, sending oil even higher. Or that's if it does get empty. They might have to, you know, just stop sending out oil so it doesn't get empty. And so once again, that's still going to cut off supply because they probably aren't going to let it get empty, because that's, of course, not a good place for the US government to be at all. So I wouldn't be surprised if pretty soon here they're going to stop drawing from it. And of course, that's going to send oil even higher. Alright, so Q1 GDP officially negative from Delta 1 here. So US first quarter final GDP is negative 1.6 versus preliminary GDP of negative 1.5. And of course, this is annualized. And following that, we also saw the PCE come a little bit above where it was expected, as we can see here as well. Matched or a slight, surprise to the upside. So nothing crazy there, but this is the notable thing, is now the first quarter GDP of 2022 is officially negative. To follow up on that, quarter one, quarter two, if both those turn out to be negative, then of course the Federal Reserve, the US government, everyone's going to have to officially admit we're in a recession. And looks like that's going to be the case. We can already see Atlanta Fed quarter two GDP tracker tumbles to 2.1%, or negative 2.1%, I should say. And this is as of July 1st here. Keep in mind, it was negative 1% on just June 30th. So it could be revised even lower. As well as when we look towards Q2 earnings, we can see Micron saw their adjusted revenues, basically their guidance here to be significantly lower for their revenue than was expected. And then we move down, Japan May industrial output was collapsing month over month, way worse than expectations. So of course this just points to everything slowing down, this points to everything slowing down, and this shows that earnings are going to start looking good, because really what's happened so far is all we've seen is a lot of the crazy excess liquidity has kind of come out of stocks, but now we have, now we're going to probably have to start dealing with the earnings side of it. Just the part two, I think Michael Burry put out a tweet about that recently, and I completely agree. Q1, Q2, first half of 2022, that was draining liquidity. Second half of 2022 is everything actually starting to break. Though, one quick thing to cover here, because, obviously every one of these, it's good uranium news, bad news for everything else. So, U.S. government announces federal uranium reserve, only 1 million pounds purchased for now, which is not a lot at all. Though it does show the U.S. government is getting worried about uranium supply if they went out and even, made this in the first place. And so this could actually become, noticeable part of demand for uranium if a significant amount of pounds are purchased, like Spud is doing today. Though, of course, we'll have to see if they choose to actually expand this, and that could start pulling even more supply out of the market. Though, we'll have to see where this goes. Either way, it's definitely a bullish sign, especially for American uranium companies. Either way, though, not too much else to go over here. Of course, this is not financial advice. Do your own research. Make sure to hit the subscribe button. It's free. Just, helps me out a whole lot. Anyways, thanks for watching, and I will see you next time.